Oh, what's up, guys? Good evening, everyone. This
Hi,
is
everyone.
Market
Hello.
Asia.
everyone.
Good to see every one of you here. And if you guys can hear us loud and clear, please type a hi in the comments. Right, we are still waiting for people to stream in right now. And thank you for tuning in on a Sunday evening. All right, I know tomorrow is a Monday. Tomorrow is a Monday. And it is the start of a new school term already. So I believe there are many parents, all right? So yep, you get prepared for your kids to send them to school again and things will get busy again. But yeah, once again, thank you for tuning in. Okay, so we have the people comments streaming in. Hello, Teddy. Hello, Amanda. Hello, Joe. Hello, Gary. Han Hock. I see a lot of familiar names. Chia Hong, Shufian, Junghari, Katie, Ryan. Thank you for tuning in on this Facebook Live. And before we get really started, right, just want to share with you guys that we have a fantastic giveaway. Let me share with you this thing first. We have this Black Dot GT Smartwatch giveaway. All right, so it is very simple for you to take part and participate. All you have to do is to like this Facebook Live, share this Facebook Live, and comment with a hashtag market insights, and you are good to go. And we will announce the winner tomorrow afternoon on our MarketWise Asia Facebook page. All right, very simple. We will hold this contest until the end of tonight. That is 2359 11:59 p.m. in the evening tonight. So yeah, so even if you are watching this Facebook Live, recorded Facebook Live, it is fine. You can take part in this giveaway. So go ahead, just like, share, and comment with a hashtag market insights. Just a reminder, right? You have to share. So you must have a sharer tag on the comment so that we can see that you actually indeed share this Facebook Live. We want to get and reach out to as many people as possible. So this Black Dot GT smartwatch is worth $139. So please go ahead, you could be the lucky winner. And yep, Terence and Collin, can you please say hi to the crowd first?
Hello.
Hello, hi, everyone.
Good to see everyone over here. So right now we have about 180 people in the room already. So today's session will be more of a very kind of a casual session. So basically we just want to talk market and chit chat with the two experts over here. And of course, we have Collin, our resident expert at the Systematic Trader. And today the guest speaker is Terence Tan from IG Asia. And Terence, right, is currently the head of business development and education for IG Asia. And he has accumulated 15 years of experience in the financial industry since 2006. And you know what? Terence and Collin will also be speaking in the upcoming Market Insights Virtual Summit that's going to be held on the 10th and 11th of July this month. All right, so we have quite a number of fantastic speakers. We have Michael Kovell over here, right, the best-selling author of Trend Following, and Tom Basso, the original market wizard and also a hedge fund manager, and also Boris Schlossberg, a currency expert also, and a number of other speakers. And of course, Terence from IG will be speaking as well. So this event is totally free, proudly sponsored by IG. So please go ahead and register for this event. So just click on the link. I will share with you the link in the comments. So just give me 1 minute over here. Okay. All right, I posted the link in the comment, and you guys should be able to see the link on the scrolling bar over there also. So yeah, as I mentioned, totally free. Please go ahead and register for this event. And today's session, right, we'll be sharing with you, as I mentioned, it's more of a casual chat, right? So many have seen that wealth being made in the recent market runs up since 2020, and feel the urge to buy in when many traders and the investors are starting to cash out. So as the market kept going higher and higher, some traders and experienced investors are starting to cash out a bit already. So how do advanced traders like Terence and Collin view risk and reward in this current market condition? Okay, So as I mentioned, right, so since the start of the year 2020, about last year, February, March, then the pandemic COVID-19 came, right? Then there was a sell-off, and then all basically whatever you buy afterwards, right, can be basically the growth stock. It just ran up all the way, and the market has been bulldozing for many months until the start of this year, when market start to whipsaw a bit, it start ranging a bit. And by now you should realize that in market it is not as easy to trade and not as easy to make profit compared to last year 2020, right? So given this kind of current market condition, right, so maybe we can ask Collin and Terence what is their views on this. Okay, who want to start first, Collin or Terence?
Okay, let me start first. Okay, hi, welcome everyone. Today, yes, so the market has been rallying. Yeah, so what am I looking forward to this year? Like what I mentioned previously, I think we are in the mid-cycle right now. We are in the middle of the bull run. Last year was a good 1 year of rally, okay, from March onwards. I think there are still some pockets of opportunities, in the market. I mean, what I'm looking for is a recovery, the recovery of and opening up of the economy. So what I'll be looking at is the recovery stocks. At the same time, also commodities. I'm looking at commodities that they'll be catching up, okay, as the economy open up, the commodity will start to pick up also. Recently we also had this infrastructure plan, that just Friday, is it Friday or Saturday?
I think it's Friday,
right? They approved the infrastructure plan. I think this will also cause a commodity price to go up, and then there's still massive amount of money that is still around. The challenge with the market right now is if you were to cash out, and you were to go into cash, then where it don't make sense to just keep money in cash, because we know that the market is still rallying and inflation is still happening. If you were to cash out, and with this low interest rate environment, if you cash it out and you put it in cash, it may not be a wise thing to just keep it in cash, because you know that inflation is still there and the economy is still opening up. So I will stay invested. And look for opportunities. Okay, mid last year, I think we have all the growth stocks that started to run, technology stocks started to run. But I think there will be a sector rotation into maybe more of the economy itself. When the economy open up, what are the sectors that will benefit?
I believe it will be the travel kind of stocks also.
Travel stocks, travel related stocks, hospitality, and even manufacturing. Even in manufacturing, people do not have opportunity to spend money, and I believe that there's this revenge spending,
right?
Yeah. I mean, let's think about ourselves. Let's say, example, right now we are trapped. We are trapped in this Singapore for so long, right? If given an opportunity to travel, everyone want to hey, let me go and just travel and revenge travel and revenge spend. Okay, so previously they were not allowed to travel, so they started to buy stuff. Things like even like Rolex watches is like going all-time high. We have cars, that's going rising in prices. Classic cars are rising in prices. Things like that because of the low interest rate environment. So as
I think you also did some revenge spending, right? You bought some Rolex, right? Is that so?
Yeah. But I think the key is as the economy recover and as the economy open up, I think they may pick up, all these sectors may pick up. That's my view, look at. So mainly just stay invested. And maybe in the later part, in the recovery, when the economy start to pick up, and then look at commodities. That will be really the part of the cycle. Yeah. So that's my view.
By the way, right, Collin
Yeah.
will be speaking at the upcoming Market Insights Virtual Summit, and his title will be How to Profit from the Commodities Super Cycle. So this sounds very interesting, right? So I
Yes.
know that right now there are about 300 people on this Facebook Live right now. So I just do a very quick one, okay? So in case for those who miss out on this, we have this Market Insights Virtual Summit that's coming up on the 10th and 11th of July this month. We have quite a number of content-packed speakers over here: Michael Covell, Tom Basso, Boris Schlossberg, Terence Tan, of course, and Collin also. So all you have to do is just to register for this event, totally free. Let me get you the link once again. I will post the event link in the comments over here, or just click on the register free, first name, email, and just a contact, and you are good to go. And you should receive an email from MarketWise Asia. And if you do receive it, right, remember to check your spam folder as well. And also we have this, for those who are joining us, 300 plus people, we have this Black Dot Pro GT smartwatch that's worth $139. All you have to do is very simple, just to like and share this Facebook Live and comment with a hashtag Market Insights. We'll hold this contest until 11:59 p.m. tonight. So if you are watching this recorded Facebook Live, it is totally fine. You can also take part in this contest until today, 27th of June, 11:59 p.m. And we'll review the winner tomorrow afternoon on our MarketWise Asia Facebook page. Okay, so talking about this, Terence, what's your take on the current market right now, since Collin has already shared his views already?
Yeah, pretty much I agree with what Collin has said. So we're actually in this big cycle that is actually going up, right? I think everyone has already noticed that the amount of money that the Fed has printed is actually flushing the markets. A lot of the analysts are actually trying to watch and see, like, so when is the money going to be pulling back? I think there was actually this comment from the Fed official saying that they might be looking at starting to tighten from 2023, right? Then that's when the market starts to drop, like that there's this knee-jerk reaction, so-called. But the thing is that 2023 is still a while away, but the thing is the money is still getting flushed. So we are still seeing that the market is still running up because of that. Just be a bit more wary that I think if, let's say, if you're already sitting on tons of profits, right, I think you can actually start to do some sizing of position. Well, what I actually mean here is that when you actually trade, right, it's like 40 shades of gray, right? So you don't need to get in, get out, right? You can actually get in and you see a lot of profits that's actually sitting on the table, take 5% off. And then after, when the markets continue to run, take 5% off. Like you can just take it off. And if the markets continue to run, you can still benefit from it, right? So what actually, I do actually ask some of my hedge fund friends, right? So like, of your funds that you have for the investors' money, right? What is the percentage that is still invested in the markets? They share with me that I think right now they actually invested around about 30 to 50%. Right. So if you look at what is the norm? What is the norm for a hedge fund is usually they stay invested about 80 to 90%. All right. So when they have a very, very strong conviction, they put 80 to 90% in the markets that they feel good for, and then they let it run. So right now the investor amount is around about 70% to 50%. That means they are still pretty much invested, like more than half. But they actually do take quite a bit of the profits off the table already. All right. So if they are doing that, then I think we also should be also doing something that is similar. If you actually look around Singapore, right, you can actually see a lot of Lamborghinis going around, like Porsche, Ferraris. A lot of people have taken a portion of their profits, but they are still invested into the market. So it's kind of like you don't know when this trend will finish, right? I think when you actually hear from Michael Covell, who is actually going to be talking at this summit here, the trend is a friend until when it's proven wrong, right? So you can slowly take it off the table here and there. Also, I think personally, I'm also like looking at some of the other opportunities. I think Collin has mentioned that commodities actually is an area that a lot of traders are focusing on. Also, another hot topic in Singapore these days are cryptocurrencies. All right, I'm not asking you guys to actually buy or sell for that. You can actually notice that for cryptocurrencies, a lot of them has actually came off quite a big chunk. So actually, what we are trying to do is that stay invested for those traditional assets here and there, right? But if let's say if there are any opportunities on other sectors, let's say like cryptos, if cryptos go down another 50% or 70% that kind, right? That's when I'll actually be picking up the dips there. So don't only just focus on one specific markets there. Take a look around. You can take profits from here and there. Then you get, if there's opportunities in commodities, cryptos, you can just jolly well go and take opportunities there.
So you mentioned that, you know, instead of just looking at the pure equity side, right, you also like taking a look at the crypto, right? So how many percentage of your, you know, capital are allocated for crypto? Is that, you know, 10%, 50% that kind, or you are very heavily invested in crypto?
Actually, crypto right now, I'm around about 20 to 30% ish. I'm still looking for the big dip lah. It's like now, if you were to look at the price of Bitcoin, okay, I am not a fan of Bitcoin. I hold 0 Bitcoin. I'm not a fan of Bitcoin at all. But if we actually usually take reference of the Bitcoin prices. So right now it's around about 33K, that kind of ish, right? I will be getting into the cryptocurrencies that I like when Bitcoin goes down to 10K or less. Yeah, so that is the kind of dip that I'm looking out for.
So are you hinting to the crowd that, you know, Bitcoin could drop to 10K, that kind of prices or not?
The thing is, we have already seen 2 big cycles already.
By the way, right, I haven't do a disclaimer, right? Whatever we say today is just for educational and informational purpose, okay? Yes, so please do your own diligence, okay? So this is meant for casual sharing, right? So yeah, it's all for fun and for educational and informational purpose. Okay, yeah, good to go, Terence.
Yeah. So after this, don't go and short Bitcoin. Actually, a lot of people were trying to short the cryptocurrencies, and then it went back up, and then they're actually in the losses there. The thing is that we are just playing out certain could have happened scenarios. If it really goes there, then yes, we are actually going to be buying more. If it doesn't go there, so be it lah. Am I shorting cryptocurrencies? No, I am not. All right, because I think the sentiment is still very strong. I think people are still looking to buy in here and there. So yeah, so there's a very minute chance that it might go down to 10K or less. But if that happens, right, that's your fire sale, or that's your Black Friday sale. So why not, right? Yeah.
So what if, for example, Bitcoin, Ethereum, as we know, the Bitcoin, it is still the, you know, the big brother, the 老大, right? So whenever Bitcoin has a flu, the rest also catch all the flu also. So what if Bitcoin doesn't fall to, let's say, 10K, and it started, you know, drop to 20 plus K and started to hit higher? So how do you know when it is time for you to get inside? So as you mentioned, right, you are a trend follower, right? So what are the telltale signs that, you know, Bitcoin is going to hit higher up? Maybe Collin and Terence, you can share with us your take on this.
Yeah. Okay, maybe I'll just or maybe Collin. Okay, I'll just do a quick one. I think now if you actually look at the trend for, let's say we just look at Bitcoin itself, right? So you can see that now it actually came down from the high, it went down, it now goes sideways. Usually, like, you know, you have this thumb, then go sideways, and then thumb again, right? So the thing is that the second dip might happen, it might not happen. But if it were to happen, then I think the trend line, you can already draw in a very nice trend line. And it's still back to that 40 shades of gray thing, right? So sizing of position. As it goes down more, that's where I'll actually be picking up those cryptos that I like a little bit here and there. Yeah. So the thing is that I'm not looking for a specific point to throw all the money in. It's more like if it comes down, let's say when it's 25K, I'll get something else. When it's 20K, I'll get something else as it comes down. Yeah. But if it doesn't come down, then I'll just stay on the sidelines and just watch the show lah. Yeah, so I think that's one. As for the trend wise, it's obviously downtrend for crypto. So I think that's very, very clear. I think it's what we are looking out for is when it starts to go back into the uptrend. Then that's when we can see that, oh, okay, so that is when we might actually get in a little bit more. But for that to be happening, then it has to come down much more. So we are not really seeing that yet. So I think it's more towards, I think another question here is like back to the equity markets. So when do we take profits from the rest of the positions, like those who are actually still invested in the markets there? So it's more of, let's say, when you can see that there's actually a long-term trend that you draw in for the major indices, that trend line is still intact. So until when that breaks, right, it's still a call to stay invested. Yeah, Collin?
Oh yeah. So okay. So for myself, for cryptocurrency, actually, I went in last year, mid of last year. I started with 10%, and then the portfolio grow to almost like 70-80%. So I decided to cash out, cash out all my capital, whatever money I put in, I cash it out first. So that was the first thing I did. On hindsight, it was the right thing to do. And then I went into commodities. I think cryptocurrency is a long-term trend. It's a long-term uptrend. Just like what Terence said, right? I'm always looking to buy Bitcoin. But at this moment, since I'm really invested in Bitcoin, I do not, personally, I wouldn't want to add on position just because of portfolio sizing. Even currently, based on portfolio is still too much. But
do you say that you already cash out already everything? Or
no, I cash out my capital.
The capital.
Okay, capital. Okay, so basically you take out capital and you still put the rest all inside.
I just leave it inside.
Okay.
Yeah.
Oh, by the way, Collin just take out his capital. Doesn't mean he take all the profit of the paper.
Just get out capital. Yeah, just get out capital. So at this moment, I think Bitcoin is more like sideways. The range is about 30,000 to 40,000, 30,000, 40,000. The best thing for Bitcoin right now is to stay sideways. That means to say above 30,000. Recently, we have a dip below 29,000. I think that dip, another quick rebound was actually positive because, whipsaw, right? People got stop out, and then right now it's about 33,000. I think it's positive that we have like buying pressure below 30,000. So at this moment, I think it will be still on a sideways trend. I will only get in if it clears 40,000. But I may not get in Bitcoin. In fact, I don't have Bitcoin also. I'm more of an Ethereum fan. So I and also I do yield farming also. So I do yield farming. I do staking also. So that's what I would do. So I would look at maybe Ethereum and even some of the altcoins. Like Aave. I'm looking at Aave's. Aave is like the blue chip of DeFi, So we have the blue chip of cryptocurrencies like Bitcoin, Ethereum, Then the blue chip of altcoins is more like Aave, all these DeFi coins. So I always like to look at the leaders. What are the leaders in the market? So so I'll be looking at that. I go in one at very high price, but because the amount is small, so I didn't do anything. But when it dip lower, I will look at those like Ethereum, Aave, maybe not Bitcoin, because I believe that Bitcoin in terms of use, right, is much lesser compared to Ethereum. Ethereum, we have the use of DeFi. We have recently the EPI 1559, right? That is starting to burn Ethereum because of the usage also. So all this will be positive for Ethereum also. So that is my personal view, personal portfolio. As of, let's say, example, you have nothing right now, you have zero crypto right now, then I think it's a good time to dollar cost averaging because you cannot catch the low. So anything 30,000, I will start to pick up, dollar cost average over the next 1 year, 2 years. And I believe that if it's a long-term bullish cycle, then you're not so concerned whether the price can go to 10,000 or 20,000 or 30,000, or even it can clear 40,000, because you will be able to dollar cost average at a good price. That's for people who do not have anything right now. Currently.
I think Drill Rig, interesting name, asking, right, is it a dead cat bounce? Terence, do you think that? I think you are more in favor of thinking that this is a dead cat bounce. Am I right to say that?
Okay. It is a dead cat bounce. I think so we were actually talking about this quite actively in some private chats here and there. I think there was actually this big dip for the cryptocurrencies, and then there was a big run up. The run up lasted for about 1.5 weeks to 2 weeks, and then all of us said that's a dead cat bounce. Like, don't buy in there. That's a dead cat bounce. Wait for it to break some new lows. and then it actually did really break into some new low. So if you look at the charts, you can actually see that now Ethereum's low is around about 1,800 plus. Some prices actually went to 1,700 plus, kind of. And then if you look at Bitcoin, there's also some new lows that's coming on. So yeah, I do agree that this what we are seeing here is actually a dead cat bounce. I'd like to also share a story that I personally experienced. So I like to actually use this in a manner that I share with my friends, right? So my hairdresser actually asked me, "Hey, Terence, now can buy stocks and shares?" Not. I'm like, wow. When you ask me that question, like it's always very loaded. There's actually a few telltale signs in the world that tells you that it's time to cash out some of your profits. One is when the Times magazine, right, comes out with the front page saying how good the equity markets is. That's the time to sell everything. All right. So when the Times magazine finally comes out with that cover page there, right? Second is when the taxi drivers as well as your hairdresser ask you, "Hey, should I buy stocks right now?" That's also one of the signs that the market seems to be a bit hot. When I share with him, like, have you thought about cryptocurrencies? He hasn't thought of it, but he has heard of it here and there. So to me, it's like, okay, so that means he's actually hearing more of the equity side, and then he hasn't heard much of the cryptocurrency side, which tells me that maybe it's time to actually shift the profits from equities to cryptos. I think that's one of the telltale signs here and there. But I think when I talked to him about cryptos, right? So I did ask him, like, if let's say you put in $10,000 and you lose 80% of the value, will you lose sleep? Like that means your 10K becomes 2K. And then straight away his reaction is like, wow, can lose so much. Then he said, yeah, I think cryptos 80 to 90% drop is quite normal. They said, wow, then that is very risky. Then so to him, it is not really the right instrument for him. All right. So I think that is one of the thought process that I'll actually always ask my friends, like, if it goes down 80 to 90%, are you comfortable with it? If they're actually comfortable with it, then yes, like what Collin has said, if you're not already in, right, you can actually start to get in a little bit here and there. Don't need to go in aggressively. If there are actually further prices lower, then that's actually when you can just get in a little bit more here and there. It's there's no way that we can time the markets.
So talking about the kind of risk drop, 70 to 80%. I realized that when I talk to some of the people, they always say that no, I'm okay, I'm risk averse, I can tahan, I can withstand the kind of 50% drop, 60% drop, 70%, 80%. I'm totally fine with it. That is when things are going well, okay, to me. When the shit really happens, they cannot take it one. Most people cannot take it one. So when prices start to drop, 20%, even that the equities market recently, it's not even a 10% correction, and people are starting to worry, hey, how come the stocks that I bought is starting to drop, this stop out and all this stuff, just starting to get worried. So I don't believe when people say that they are risk averse, they can withstand 50% drop in their portfolio, 80%. Most likely it is just thinking that they can withstand this so-called drawdown, but in actual fact, most people cannot take it one. So I still think of this.
Correct. So what I will do is that I will literally print out the prices of like Ethereum back at the high, and then when it drops, right, I'll like show them this, like it really did drop. It was just only a couple of years ago, and then I see their reaction. Yeah, that's how I usually gauge whether do they really mean it, or do they just like pay a lip service.
When it really dropped 80%, when it's time to buy, then they don't dare to buy, thinking that it will drop further, right? Yeah, when price goes up so high, they buy again, then the market correct, then they start to panic again. So the whole cycle, they sell at the low and they buy at the high, and this cycle repeat and repeat until they go broke. So that's most what retail trader and investor do.
Correct. I would like to also put it. I would like to also put a note now that for those actually hearing this this Market Insight Summit, right, for the first time, right, I'll really urge you guys to actually sign on. If you haven't even attended one of the summits before, right, so we're actually holding this almost every quarter. The kind of insights that you're actually getting from the experts is really so valuable. Everyone is actually sharing what they actually know of the markets here and there. Like what Alex just mentioned here, right? It's just one of the tidbits of the kind of knowledge that you're actually getting from this kind of summit. So if you're new to this, right, please go and sign on. This is actually free, and
Right.
you'll hear that all the experts are actually talking about the same thing. Yeah.
So I think there is about 400 people in the Facebook Live right now. So once again, thank you for tuning in to this to this Facebook Live Let's Talk Market session. So I will post the Market Insights Virtual Summit link in the comments. You should be able to register for this event, and you should be able to see the link on the scrolling bar as well. So we have a quite number of speakers: Michael 𝗕𝗃, Tom Basso, Boris Losberg, and of course Collin Seow and Terence as well. So the event is free. Totally proudly sponsored by IG Asia also, and it's going to be held on the 10th and 11th of July 2021. So just register for it. It is totally free. And we also have this giveaway right now. It is this Black Dot GT smartwatch. All you have to do is very simple. It is worth $139. All you have to do is just to like and share this Facebook Live, and then to comment with a hashtag Market Insights, and we will draw one lucky winner by tomorrow in the afternoon, and we'll share the winner on our Facebook page or MarketWise Asia Facebook page. And if you're watching this Facebook Live recorded, it is fine. You also can take part. We'll hold this contest until 11:59 tonight. That is 27th of June until 11:59 p.m. So please go ahead and like, share, and comment with a hashtag Market Insights. Okay. So that's all for now. And anything to add on, Collin, regarding what Terence said?
On cryptocurrency?
Can be the equities.
In general.
Take a look at that. Yeah.
Yeah. So, yeah, I think when you go into cryptocurrency, you really have to understand the risk. I mean, besides just prices drop, right? There are other risks involved. Like, for example, if you go into the DeFi space, there are hacking, there are rug pulls, there are exploits and things like that. So, but I feel that there is asymmetrical risk. Like DeFi, decentralized finance only started like becoming hot last year, right? So, so we have two groups of people. We have one group of people who are investing in cryptocurrency, that are through the centralized exchange, buying and selling of Bitcoin or Ethereum or Litecoin, whatever. So they are doing all this trading. And then there is another pool of people, a subset of these cryptocurrency people who are going into the DeFi space, doing yield farming and things like that. So I think there are opportunity in both. But if you talk about asymmetrical risk, I think DeFi has a lot of growth. And we are so early, that day I just read there's only 2 million addresses, right? Of Ethereum addresses that most of the DeFi uses Ethereum addresses. So only about 2 million people are using it on DeFi. So so it's a very, very new, much newer compared to Bitcoin. Bitcoin has been around at least more than 10 years, right? So DeFi is less than a year, right? It's less than 2 years, definitely. Yeah. So there are opportunity, but saying that there are risks involved in cryptocurrency. The reason why I like it is because asymmetrical risk. It means you have a chance of losing maybe 90%, but a chance of making maybe multiple fold. So that's the advantage. But I will look at the market more like an asset allocation rather than just trading. If you just go into market or trading and say, what to buy right now? I want to buy commodities, then when to sell, then you are still trading, trading. Even though systematic trader is trading, right? But currently the situation is you cannot put 90% in cash. It don't make sense to do that. And so that's why you really need to diversify your portfolio into income producing portfolios. That means what are the things that create income? So think about it like stocks. What are the dividend, cryptocurrency, yield farming, staking. Property. If you can get positive yield from your low interest rate to invest in property, things like that. So you really need to think on a much bigger basis. I think that there are two challenges. First challenge is a lot of people, like what Alex mentioned just now, is which I'm quite, because it's natural instinct for me, right? When the price is good, I will look at to buy. No, but nowadays, when I observe, it's opposite. When price is good, right, people start to run away from the market. When price are hitting all-time high and going parabolic, then people start to rush in. So I noticed that what people do and what I do normally is a bit different. So I just want to share with you all that you should buy when it's low, but make sure that the thing that is low is something that is good. That means eventually long term it should recover. No, that's the first thing. Buy when it's low, but make sure that that thing that invest is of value. Second thing is really diversify, rather than just looking at a very trading mentality right now. Because yes, you can have some portfolio that is for trading, but you should not put everything into trading, and you should also not put everything into cash. So you should diversify a portfolio, income producing assets to continue to fight inflation. If not, it's a sure lose if you put everything in cash.
And you talk about DeFi. So I think maybe some of the people in this room, maybe they're not be very they don't understand what is DeFi. So DeFi means decentralized finance. For me, I'm also really not an expert on DeFi. So let's say if somebody is very interested to know about DeFi, like to them it's totally brand new, and to me it's also pretty new. So how do I actually get started to learn about DeFi? Where is anything can point to a good source of information where you can start learning about DeFi and such stuff?
YouTube, there's a lot. YouTube, there's a lot of YouTube videos. Twitter, I get a lot of things from Twitter. DeFi is so fast that sometimes you cannot get indexed into Google. So if you Google, then it's very slow. Google to get indexed very slow.
By the time Google come out, it's too slow already.
Too slow. So either Twitter or YouTube, or even some of the Telegram group. Some of the Telegram group. So we are talking about use case. Like when we talk about what is this Ethereum used for? Now we can use Ethereum as oil and create exchange. We can use Ethereum as oil and create a bank. And what is this Ethereum? Ethereum is basically a set of a blockchain contract which you can create using the code, right, to create protocols from there. And then people are basically investing in all these projects.
Okay. Yeah. So I think enough for crypto for now. So I think there's one gentleman, James, right? There's one question targeted to Terence, right? Terence, can you share your view for the next 6 months for commodities, gold, silver, copper, etc.? Do you want to share some of your views, if possible?
Yeah. Okay. I think it's more like I'll actually share it in a general, so not very specific to like so gold is this, silver is this, copper is this. I'll actually go more generic. So what I'm actually looking at is we actually ask ourselves these questions, like ourselves being the traders here, right? So like in the past, when you have this big printing of money by the Feds and as well as all the central banks, you see that the gold prices actually runs up along with it. I think this time round, when the crazy printing of money happened, the price of gold actually went up, but not as much. And we actually already started to see a bit of a correction. Of course, then you have a good bounce. And then after that, when the Fed actually says that they might be tightening their interest rates from 2023 onwards, then gold actually took a plunge of more than $100. Right? So the thing is that the question that we're asking ourselves is, are they now using gold to hedge, or are they using some other stuff? All right. So so there's one that's like for inflation hedge. I think there's another aspect of it, which is what Collin mentioned just now, was actually the recovery of the economy. Now, when we are talking about the recovery of the economy, the things that we need to also focus on would be things like copper, like palladium, platinum, where they really have got industrial users. All right. So I will actually put it as two very distinct categories there. So like those with industrial users, I think when the economy picks up, those will actually benefit, as opposed to like gold and silver, which is usually used as a store of value. The question now is, are they actually using them as a store of value, or are they actually putting their money in the stock markets because actually they can see a better returns there, or are they also looking at cryptos lah? So now, just addressing to the questions itself, if we look at the gold itself, right? So gold, before the Fed actually made that negative comment, it was about 1,900. After that, it went down. I think right now the price is about 1,1781. That's what I'm seeing on my screen here lah. So it actually dropped by about 100 points, just like that. If you pull back out, right, on this price of gold itself, if you look at the weekly chart, right, what happened is that you can see that it actually hits towards quite close to 2,100. That was, when was that? Let me see. So that was around August, yeah. So that was around about August-ish. Since then, it has came off, right? So there was actually a downwards trending. And if you actually try to parallel this versus the recovery of the economy as well as the better situation for COVID, so like COVID kind of gotten better, as the economy gotten better, but gold seems to be coming downwards. So is this an effect of buy the rumors, sell the news? So in this case, the positive news is that the economy is actually going to be recovering well. So they actually bought gold way before. So gold actually has got its run up. As economy is recovering, they start to cash out on the gold itself. So I think this effect is something that we are questioning ourselves. And for this dip downwards, and then we see it going back up for this past few weeks, right? And then this dip down again. The question is back to that, what the person was mentioning just now, is this a dead cat bounce? All right, so I think that's something that we are asking. So gold, I'm not exactly too bullish. I'm just afraid of one thing. So if you guys have got access to Google right now, just try to Google this thing called the US 10-year Treasury note. All right, so US 10 years Treasury note. You can just pick any of the websites that comes out on Google, like whether it's Yahoo Finance or Market Watch or anyone. I think the rates that you'll be seeing is about 1.528%. All right, 1.528%. So that's the US 10 years Treasury notes, currently the yield itself. We're actually watching for this yield, right? If this yield goes up to about 2.18%, all right, if it goes up to about 2.18%, that spells trouble. All right, I think Collin has put up the chart on this. So 2.18, so where's 2.18? It's still quite high up there.
Much higher.
Yeah, it's much higher. So that's where actually people are watching out for. So 2.18 is the everyone dies kind of a level there, right? So how can we get there? We get there by one, if the Fed actually starts to raise interest rates for real. So that's like back in going towards 2023. But of course, if let's say the Fed is going to be raising rates in 2023, right? Would we already take precautions before that? Yes. So the precautions will be taken towards like 2022. Right, so I think 2022 is a year where people will start to watch out for that. And what happens is that the bonds might get sold off by the bonds trader, hence pushing the yields higher. All right, okay, for those who are actually new to bonds, right? So bond prices are inverse to yield levels. All right, so if they sell the bonds, the yield goes up. All right, so if the yield goes to 2.18, that's big trouble for the whole economy, the whole financial systems. All right, so if let's say if interest rate is going to be raising in 2023, so hence trouble in 2022, so where are we? We are in 2021, all right? So we are about a year away from trouble. So now if we were to link back to everything that we have spoken so far for the past 45 minutes, right? So we have been talking about stay invested. I think the market still looks to be trending upwards, but start to take profits here and there. And then we know that maybe trouble might come about 1 year from now. All right, so if let's say the markets continue to run up, you continue to take profits. And the same with the price of gold and silver and stuff like that. That is also where you can see that if let's say if there's some troubles brewing there, the price of gold and silver will react first. All right, so hence that's why you can see the correction for gold and silver actually came before the equity markets. All right, and then if let's say if gold hits a new low, right, then that's where you can see that I think there's really a real trouble for gold there. All right, then after that, then you can see let's see what's the yield for this 10 years Treasury notes. So everything actually links up very nicely. All right, the price of gold and silver, which is what you're asking, the equity markets, this US 10 years yield, so called. Yeah.
Okay, so I do have something to share as well. So I think personally, just my personal opinion, right now in this market cycle, we are still in a circular bull market. Circular bull market meaning that it could, go on for many years, 10, 20 years, that kind of thing. So why do I feel that? Okay, it is because of this chart over here. Okay, so this basically, okay, this is a logarithmic chart. So it is a log chart. It is not a normal chart. So basically, it is priced in terms of a percentage, so that when prices is skewed towards large number, it will make the charts look a little bit better. So you can see that this is the Dow Jones Industrial Average from the 1897, all right, to now 2017, okay, to now, to right now. So it is a very long-term time frame. Oh, by the way, I think I hear some echo. It is somebody, there's some noises from the speakers, from Terence or what? Okay. Okay, I try that again. Okay, so yeah. So, okay, everything is good. Okay, so can see that, if we use a normal chart, this looks, of course, the price looks ridiculous. But if we go to a log chart, this looks a little bit better. Okay, so it looks more a normal chart. And you will realize that, there are period of time where market is in a consolidation, okay, over here like this. And then after many years of this like this, and then we are like this, and right now prices is continuing to head higher up. And I'm not sure about you, when I first studied my CFT Certified Financial Technician exam, they have this thing called market cycles, market patterns. So there's this thing called the 34-year stock market cycle. Okay, so it might sound ridiculous to you or whatsoever. Doesn't matter. We can just take a look first. So it says that, whenever there's a market, in a circular bull market for about 17 years period, and then a circular bear market for about 17 years period, and then repeat and repeat. So you can see from the 1929 over here, 1929. This is, of course, this was the Great Depression over here. Okay, so after the Great Depression was over, and then this is more like a circular bear market. So it's kind of ranging. So it goes for about if we start from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So you need to remember this chart over here, every single bar is 1 year. So it's a very long-term time frame chart. So 1 year, and then 17 years, and then market goes into a circular bull market over here. Okay, and again, this is about how many years? Calculate again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, about there. Okay, once about there, 1966 onward to 1980 plus, it went into a circular bear market. All right, so let's say we start from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Also about 17 years in a circular bear market. And then the circular bull market resume again. Okay, let's count again. Let's say start from here. When there's a breakout over here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Also about 17 years. And the only anomaly, it is the previous decade over here, when we start from 2000. Of course, you can see from here, this is the dot-com crisis, 1999. And then this red bar here is the 2008 financial crisis. But if you count, all right, so let's say from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So it's about 13, 14 years. So we didn't really hit the 17-year mark, but about that, there's always not so accurate thing, okay? But you can see that even though like the 1999, dot-com crisis and the 2008 dot-com crisis, just like a blip in the bigger time frames, nothing much, you see. So right now we could be, I think since the 2013, 2013, we are back into a circular bull market again. 1, 2, 3, 4, 5, 6, 7, 8, 9. So we are still, right now, we are still in the 9th year. But I need to repeat that, whether be in a circular bull or circular bear. Within a circular bull, there will be a cyclical bear. So there will always be correction, you know, a small bear market and such, you know. And right now, if you see that I put in a moving average, you could put, you know, 30 years or 34 moving average. But I find that right now, this 34 moving average seems to fit quite well. Okay, so, you know, when price touches this, price start to hit higher, price start to move higher again. And it seems that, you know, price is a little bit too far away from the MA. So I believe within this circular bull, I don't know the timing, could be next year, could be right now, I don't know, could be 2 years later, we could face some correction. And this correction might not be a very big bear market. It could be just, you know, price start to ping pong and hold for a while until the moving average goes up again, and then we hit higher again. It could be like this, so we don't know. But what the end of what the gist of this session to share with you is that, you know, we are still in a circular bull market. Along the way, there is cyclical bear. So try not to short the market. Overall, the market, it is still on a uptrend. It is still on uptrend. So the people can say that, you know, we are in the biggest market right now. The Fed continue to print market. The market is going to crash. It's the biggest bubble of all time. Whatever they can say, but to me, is that, you know, Collin, you know, and Terence, we are all trend followers. So we try to follow the market as closely as possible, follow the trend. If the market is telling us it's on an uptrend, we try not to short the market. So I don't know whether you guys agree with me. You know, Terence and Collin, what's your view on this?
Agree. So I say what I mentioned, that we are in the mid cycle right now, and I think we can also coincide with the commodities super cycle, the 20-year cycle. Yeah, I think it will fit nicely. So I think the next few years, if you are in the commodity, and with the economy recovering, with this secular bull market, I think everything will turn out nicely for the next few years. You know, yeah. So another thing to share with you is valuation. Valuation is always a bit behind. Yeah. So like when we talk about when the economy starts to recover, I think the valuation will start to catch up. You know, so it is not like the valuation hits the economy, but hits the stock market, but rather the stock market will hits the valuation, will go in front of valuation. So as in the down cycle, in the first part of the recovery, the PE ratio and all these things will all look very high, you know. But so this will catch up, you know. And second thing I'll share with you all is observation is why will Fed increase interest rate is only because when they see that the economy has fully recovered. When the economy starts to recover, then they start to slowly increase their interest rate. But it may not be a bad thing, because like what we see in the last two cycles, we have the Fed increasing interest rate in 2003 all the way to before global currency crisis. The stock market continued to rise. You know, from 1.5, the Fed started to increase interest rate until before COVID, the Fed increased interest rate, the stock market continued to rise. So so understand that the Fed is not there to crash the stock market. That's not the intention of the Fed. The Fed is there so that they don't make sure that the economy do not overheat, and they will only want to increase the interest rate only when they say the economy is on stable footing already. Then they start to thinking of increasing interest rate. And I feel that they do not want to increase it so much that they crash the economy again. Then they have a big problem. Yeah.
But do you think they are in a dilemma right now? Because, you know, the inflation is creeping up, and they cannot, you know, just increase the interest rate to tame down the inflation. So that their hands are a bit tight right now.
I share with you their secret weapon. Their secret weapon is to do rumors. That means I want to increase interest rate, you know. Then the economy, the thing will start to pull back, like gold and silver will start to pull back.
So they just always keep a spin first.
They just say I want to increase interest in the future. The rumor of wanting to increase interest rate caused all this to pull back already. But you know, so it's not the actual increasing, because by then the economy will be well and on its good footing already. But it's right now when the economy is still not very not very on its good footing yet. They say, I want to increase interest rate 2 years later. And then now all the commodity prices start to drop over the last 2 days. Over last week actually. Yeah. So actually they have a skill that is called talking.
So you think that the commodities market will continue to high, and also simultaneously the stock market will also continue to go higher up? So is that what I'm trying to say?
Yes, that's my view lah. Yeah.
How about Terence? Do you have any views on that?
Yeah, I think it's still back on that, like the way you actually when you draw that 17-year cycle thing, right? So it's kind of like when the prices actually run away too far from that line, so it tries to always try to come back to the line to try to visit it a little bit there, here and there. I think that's where we can actually try to pick up the dips there lah.
Yes.
Yeah, so it's I think what Alex was trying to say is that we are not actually asking you guys to actually short the markets. Don't do that. I think it's more towards like trying to see where the opportunities is, and then if let's say if you actually see more opportunities that is coming on for like commodities, that kind. If let's say if there's any pullbacks that actually happen, I think that's when you can actually sort of get in a little bit here and there. Yeah, so it's still back to that 40 shades of gray thing. So it's like see opportunities, get in a little bit here and there, like stuff like that. Yeah.
Yeah, and then you can see like oil prices. Oil prices have been going up, but it's nowhere near the all-time high. Oil prices been up for how long? At least for the last beginning of this year. Has been going from March this year.
Yeah.
From $58 right now, it's almost like 70
plus now, right?
Yeah. So it's broken down the all-time.
The all-time high was I think in 2008, where it's about $140 per barrel. 140. So right now we are just about halfway. Halfway. Yeah. Okay.
So yeah.
So again, right now we have about 450 people on this Facebook Live, right?
Cool.
Thank you for tuning in again. Thank you for tuning in on a Sunday evening. Your time is very precious. Okay, so we have this giveaway over here for those who just joined us. Okay, to miss that, we have this Black Dot GT smartwatch worth $139 to be given away to one lucky winner. All you have to do is to like, share, and comment with this hashtag market insights. You must do all three. 1, 2, 3, like, share, and comment with the hashtag market insights, and we will draw the winner tomorrow afternoon on our MarketWise Asia Facebook page. And if you are watching this recorded Facebook Live, doesn't matter, we also hold this contest until tonight, 27th of June, 2359, 11:59 p.m. So continue to give us your like, share, and comment. And okay, we also have this Market Insights Virtual Summit that's going to be held on the 10th and 11th, 2021 July. So we have a number of speakers that are going to share with you their knowledge, strategies, and their market outlook for the rest of the year. So do register for it. Of course, Collin and Terence will be speaking as well. So do register for it. I will put the link in the comments. So just register for it. It is totally free. Proudly sponsored by IG Asia. All right. So any question for the speakers? We can take a few more questions before we call this a day. All right. So let's take a look at the comments. Any questions so far before we call it a day?
Okay, while we are waiting for the questions to come on, I would like to also just say this, like when we first started out learning about investing and trading, I remember that was when that was back in 2005, 2006. So I graduated in 2004. At that point in time, I was quite clueless about everything. So I was actually looking for some valuable resources here and there, like books and stuff like that. I couldn't really find a lot of things back then. It was just a few good books, and after you finish reading those books after a few weekends, right? That's it. All right. So I think if you actually fast forward to now, I was actually telling my brother, he is actually 14 years younger than me, right? So he's actually still like in his early 30s. The kind of resources that he has on learning, trading, and investing is so much, and there's so much wisdom these days, right? And there's actually a lot of people sharing about what they know, and it's no longer what we call like 𝗕𝗹𝗰𝗸𝗱, that kind. Like in the past, whenever someone give you an advice, you'll be like thinking to yourself, what is he trying to sell me, that kind? Like we are in this era now whereby there's actually a lot of very true sharing. So I think just really take advantage of this summit here. Really try to learn as much as possible from the various experts, and you actually gain a very, very good insight, and you actually really level up just because of this. Yeah. So just want to share.
Okay. So I think IG, Terence, I think there's one question I think you could answer, definitely. Okay. So this Huang Hui is asking, does IG platform trade crypto?
Yeah. So for IG, yes. So we do support a few of the major cryptos. So you have like Bitcoin, Ethereum, Litecoin, and stuff like that. So we don't have a lot. I think we only have about eight of the coins there. Why is that so? Is because we are only just trading on the CFD, which is the contract for difference for the cryptocurrencies. So you don't exactly hold the cryptocurrencies. You're just trading the price difference, lah. So the advantage of that is that you don't really need to get this headache of how do you store your crypto coins. Like, do you need to set up a hardware wallet, a cold wallet? How do you actually do that? It's quite technical. I mean, for someone who is com science background, I think that's easy for me. For all my other friends, I think that is quite a big headache there. So for IG, you will just be trading the price difference. You don't exactly take the risk of what we call the hacker's risk. So yeah, we do support that.
Okay, so thank you for your answer. And May is asking, right, what is your point of view in China market now? Anybody to take this question? China, Collin or Terence, want to take on this?
I think for that, right, why not we wait for the market, the market insight summit? There are actually a few analysts there, so it's just around just a few weeks away. I've actually seen those wisdom that they have, right? I shall not preempt the content. Let's wait until then and let's hear from the experts.
Okay, so that means he's asking you to do register for the Market Insights Virtual Summit, okay? And we'll review the answer to you on 10 and 11 of July. Okay, so, and of course, talking about commodities and such, I know there are quite a few questions on oil prices and such, right? Just let you know that, Collin will be speaking about commodities at the Market Insights Virtual Summit, and his title will be How to Profit from the Commodities Super Cycle. So again, we will review the answer on the day itself. So do register once again for the Market Insights Virtual Summit that's coming right up very soon. So I'll post the link once again in the comments. Okay, so Waisu asking any comments on the tech pullback on Baba, Tencent, and JD. I think maybe you can leave that to the so-called the speakers. Is it Jin Rong? We're talking about the market outlook, right, Terence?
Yeah, Jin Rong will cover quite a bit of the question that is asked today. But I think other than Jin Rong, I think some of the other speakers are also covering on those segments.
All right. So, okay. So I think that is all for today. So we talk about crypto, we talk about commodities, we talk about the equities, super cycle, circular and cyclical bands. Such, I hope you guys gain some insights from this short Facebook live session, and there will be a lot more of content sharing at the Market Insights Virtual Summit. So thank you guys for your time. And one last call before I end this Facebook live. Once again, we have this Black Dot Pro. Sorry, I know I've spoken a lot of time on this, but just in case for those who just joined us and didn't know what's happening, we have this Black Dot Pro GT smartwatch to give away. All you have to do is just to like, share, and comment with this hashtag Market Insights, and you stand a chance to win one of this. Okay, so this is worth $139. So you have to do all this trading, like, share, and comment, and we'll hold this contest until tonight, 27th of June. 11:59 p.m. So if you're watching this on a recorded one, doesn't matter, just can take part in this contest. So thank you, Terence and Collin, for your wonderful sharing and your insights for today. So last call, do register for the summit. Okay, so any last thing to add for Terence and Collin before we call it a day?
Collin?
Terence, go ahead, please. Okay, I think even when we are looking at the markets, right? I think the most important thing, the most important thing about trading or investing, right, is about money management. There is no 100% view on any markets. There's no 100%. So I think the most important thing is really to do risk management position sizing always, you know, that and don't trade in such a way that if it goes the other way, you will lose everything. So that is the most important thing. Okay, always have enough firepower. So if the market corrects, or if the market give you opportunity, you can always get back into the market, and also watch your risk. You know, no 100% feel. Yeah. So that's what
basically is to risk management and position sizing. Okay?
Even if you know that yes, everything is correct, even if your share is everything is 100% right, you should still not go all in.
How about Terence, your one last word of wisdom for the crowd for today?
Yeah, so if there's two takeaways that you want to take away for this 1 hour, I think, so what Collin just mentioned is the sizing of the position. What I would term it as that 40 shades of gray, all right? So that's one of the takeaways that I really want you guys to actually take away tonight. The second takeaway is what also Collin mentioned just now, right? He mentioned this thing like, make your own research on what is valuable for you. Like it could be the equity markets, it could be cryptos, it could be commodities. What is actually valuable to you, and what is actually something that you want to hold for the long term, right? And then when that particular instrument actually goes for a correction, when you can actually buy in cheap, all right, that's when you have the conviction to really get in with a good amount. All right, so don't buy high, sell low. You really want to actually research out what are the things that are really good to hold, and then when it comes down, you really need to buy it when it's low and just hold it. Yeah. So this is the two takeaways: 40 shades of gray, and do your own research and buy when it's at a good cheap price.
Okay, so thank you guys for the wonderful sharing. So for those who haven't liked MarketWise Asia Facebook page, do remember to give us a like also, like our page, and to support us, I'll also be giving a continuous MarketWise Asia Facebook Live to do market outlook and such. So I will also do frequent Facebook Live until the summit. That's going to start in just about 2 weeks time. So yeah, thank you so much, and we're going to end this session.
Thank you everyone for being here.
So we'll see you guys
Thank you,
again very soon. Thank you, and have a good night, a good rest tonight.
Right. Okay.
Bye-bye.
Rest well.
Bye-bye.
Bye-bye.
See you guys again. Bye-bye.